Welcome back to our intermediate financial accounting class. Over the last few segments, we've been talking about revenue recognition. We've talked about why it's important, how we do it under the new rules. We've gone through the steps, basic examples, talked about multiple deliverables, which is one of the challenging features of the new rules. And now we're talking about what we do when we recognize revenue before delivery. So we started last time with a more complex example than the simple one we'd done before. With Neal Construction Company, we were talking about Colfax Construction Company and the fact that they've entered into a 5-year contract to complete this highway for the state of Washington. And we did the journal entries in year 1 to record the revenue from that first year. We decided that because we could come up with estimates and because we couldn't sell this to anybody else and we know we're going to get paid for what we've done because it's in the contract, we could recognize the revenue as we go. So with that background, we're ready to just jump right into year 2, 3, 4, and 5 and continue doing these journal entries. So let's take a look. Here's our year 2 numbers. Construction costs during the year, we spent a lot more in this second year, $15.5 million. We collected a lot from the state of Washington, $14.75 million. And then at the end of the year, we still think we'll spend about $16.1 million finishing up this project. The other thing that we need that we don't have here is that we ended year 1 with an ending accounts receivable balance of $4 million. That was in our T account that we finished up right at the end of our video segment last time. And we need to know that as we move into year 2 so that we can appropriately account for it. With those numbers ready to go and that process is hopefully still fresh in your mind, let's jump right into our steps for year 2. So step number 1, again, is record the costs. Remember, this would be a bunch of different entries. We're going to do it in just one that summarizes it. We're going to debit our contract asset for $15,500,000. That's that number from our table. And again, I could use cash, wages payable, inventory, supplies. I'm just going to use cash for simplicity. But it would be whatever asset we'd used or liability we'd incurred. This is to recognize the costs of construction. Actually, it's not to recognize. This is to record them. Recognize them happens at the end when we show our cost of goods sold. Step number 2 is to recognize our payment. So in this case, we got cash from the state of Washington. Again, it was given to us back here. There's that $15.5 million and the $14.75. That's what the state of Washington has paid us. So we've got cash coming in. What we need to know now is, what will my credits be? Well, first and foremost, we need to get rid of any accounts receivable that we showed because they've now paid off those accounts receivable. And we had accounts receivable, we said, of $4 million. And now that's not receivable anymore because they've paid it. But they paid way more than the $4 million, so I will now have a contract liability for the balance. This is to record payment by state of Washington. You could put payment from client too, that would work. So those are our first 2 steps. Step 3 is to get our percentage. And again, that's going to be the total spent divided by the estimated total cost. Now, please note here, it's the total spent, not the total spent this year, but the total spent period. So $3.4 million was spent last year and $15.5 million this year, which gives us, I'll just keep doing this math, $18.9 million. I've spent $18.9 million, and I have a new guesstimate that'll cost me another $16.1 million to finish this project up. So I now think that I am 54% done based on my cost estimates. Now that I've got a percentage, now I can move on to step 4. Which is to figure out how much revenue I can recognize right now. So my transaction price times the percentage equals the revenue earned. Transaction price, $50 million, given to us in that earlier slide. 54% that I just calculated. So I have now earned $27 million. I then take the revenue earned minus the revenue previously recognized, and that gives me the current revenue. So revenue earned, that's this number, 27 million. Revenue from previous periods, that's what I recognized in year one. And if we go back and look at those numbers, it's $5 million. So this year I can recognize $22 million, which brings me to step 5, and I'm going to indent that a bit because I've got some T accounts I want to use in a minute. So again, we've got sales revenue, 22 million. And my debit, again, if I can, I get rid of a contract liability because I've now earned all the money that they've given me. If there's any left over, it goes to accounts receivable. So if we go back to step 2, we've got a contract liability for $10,750,000. And the balance will go into accounts receivable. So $11,250 becomes accounts receivable. I also have to recognize my cost. At this time, I recognize my revenue, and that's going to be the number from step 1. So $15,500,000. It's going to come out of my contract asset. This is to recognize revenues and costs on our construction project. Last thing we need to do is get our T accounts up to date. So there's my accounts receivable from last year and my contract liability from last year. If you remember, we credited contract liability by $10,750,000 and accounts receivable for $4 million. That was from step 2. In step 5, contract liability got debited $10,750,000 and accounts receivable got debited $11,250,000. So contract liability again zeroes out. We end our accounts receivable with is our ending balance. Now contract asset, I could have a T account for that too, except under this method every year I close my contract asset out as part of this step 1 versus step 5 journal entry. I don't really have to worry about a contract asset under this method, but I can end up with a balance in either accounts receivable or contract liability, so I have to keep track of those. Now we haven't gone very long in this segment, but we're still going to stop right here. Why? Because I want you to try year 3 on your own before we do them together. So before moving on to the next segment, please take a few minutes, practice those year 3 entries on your own. You'll learn it a lot better if you try it and then see the right answers, either to confirm what you did or to tweak it, than you will if you just keep watching. So please give that a try, and when we come back, then we'll walk through these last couple of years. We'll see you then. Thanks.